The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
TGIF, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. Wrapping up the week here with another down day for the market. Apple under pressure. NASDAQ Composite under pressure. We'll check on the major indices in just a moment. 877-927-6648. Have to say it's tough to be focusing on the market today. Tough to be focusing in on the Christmas shopping, Hanukkah shopping holidays when you hear what happened in Connecticut today with that horrific school shooting. 18 children dead, more than 24, more than 24 killed. So just a terrible story, and it's been hard to focus on the market today and just other things going on. So thoughts and prayers out to everyone in the state of Connecticut that has been affected by this absolutely horrific tragedy today. Some house cleaning items before we get going with the show today. Breakout Investing you can catch every day on TFNN from 3 to 4 Eastern. You can pick the show up as a podcast on iTunes if you can't listen live. And don't forget to use your smartphone to listen to the show if you're out and about, out for a walk, out on a run, not near a radio. You can open your smartphone browser, type in tfnn.mobi. And you can listen to the stream that way as well. And if you want to look at charts right along with me as I go over them on the show, you can use Tiger TV to do that. That is also viewable on your handheld device as well. But if you're listening at your PC, just go to tfnn.com. Channel 1, the show is carried live. It is archived on Channel 13. All right, taking a look at the NASDAQ Composite here. We've got about 50, little more than 50 minutes left to go in Friday's session. NASDAQ Composite pretty much at its session low here, really looking quite vulnerable here. But as Apple continues to sell off, not surprising to see the NASDAQ Composite, NASDAQ 100 sell off as well. Apple is a big enough company where it is going to cast a pall over the entire tech sector, and that's exactly what's been happening over the past 3 days. NASDAQ Composite right now down 30 points, 0.9% decline to 2964. Again, Apple is the culprit here. Let's check in on shares of Apple today. Some negative analyst comments affecting the stock today. UBS cut its price target to $700 a share from $780, citing concern that growth may slow for the iPhone and iPad. You can see Apple has just completely fallen apart here, down another $23.50, 4.4% decline to 506.19. Folks, I do not think this stock is on sale here. I don't think it should be owned right now. You don't want to be owning a stock that is being liquidated like this. Just too much uncertainty. I feel like I've been pounding the table for weeks and weeks on this. This turned out to be a very good sell for the Ultimate Growth Stocks model portfolio. I booked a better than 100-point gain on Apple in late September when the stock was trading around $690 a share. If you're watching in Tiger TV, the sell was back in this area here where I started to feel like the signs of institutional selling in the stock were going to continue. So it turned out to be a well-timed sell. I never went back into the stock, and it's just a pretty much a disaster here. And I'll tell you what, if the company's earnings in January are supposed to be really good, certainly price and volume trends in the stock are not optimistic about a good quarter coming up in January. So there was a negative comment from UBS that I just said, and also a separate note from Jefferies that said component suppliers have received order cuts in the last 24 to 48 hours. Whether it's institutions selling for tax reasons, it doesn't really matter why Apple is going down. I've always said it's just kind of a multiple contraction here as the market frets about growth prospects going forward. I think it's more that than people just selling, for tax purposes. But either way, it's a stock under distribution for retail investors. It should be avoided. All right, so that's the NASDAQ and Apple. Let's take a look at the S&P 500. See that this benchmark index is at its session low as well, down a little more than 7 points, 0.5% to 1412. And lastly, we check in on the Dow Jones Industrial Average. We'll see the blue chip index down 49 points, sitting right at its 50-day moving average here. It had been back above its 50-day moving average for the prior 4 sessions. It's pretty much right at that support level right now, down 49 points to 13,121. 13,121. Not a lot of volume in the market today. I guess that's the silver lining, cold comfort, I guess you could say. NASDAQ volume tracking about 5 to 6% lower than what we saw on Thursday, which was 1.77 billion shares. So we should come in about 5 to 6% lower than that. Volume on the New York Stock Exchange, same situation, down about 6% below what it traded yesterday, which was 660 million shares. Treasuries, or I should say bond yields, slightly lower. The 10-year note down to 1.71%, 30-year bond at 2.87%. U.S. dollar index taking a hit today, down another 0.5% to 79.56. I put up this chart. If you didn't listen yesterday, I'm going to go ahead and put up a weekly chart for the U.S. dollar index. And what you have going on here, to me, looks like almost a picture-perfect head and shoulders bearish chart pattern here. You've got the left shoulder right here. If you're watching in Tiger TV, the high in the left shoulder formed in late 2011, early 2012. Then you have the head of the pattern, which was in the summertime. A big correction. Stock rallies back. The right shoulder forms just within the past 4 to 5 weeks. And what you have here is the potential for a break below the neckline here, which is going to be right around 78, 75. 79 in that area. So this is a bearish technical setup for the U.S. dollar index. Of course, the market typically likes a weak dollar, but we'll see. We'll see how it plays out in coming weeks. But the technical setup for the U.S. dollar index, to me, looks like lower prices could be ahead for the greenback. Taking a look at gold today, February gold up 20 cents. Not much of a move in gold. Settles at $1,697 an ounce for the week. Gold lost a 0.5%. Checking in on the Spider Gold Trust, popular liquid ETF. This is not looking that healthy. We could see the GLD undercut its recent low here, just above 162. Its 200-day moving average is 161.30, which is a long-term support level. But you never know. You could get one last shakeout in gold here, and that could pave the way for another new uptrend to start. But right now, GLD is looking weak after facing initial resistance at its 50-day moving average. And crude oil, January crude up 84 cents, 1% gain, settles at 86.73 a barrel. For the week, crude oil was up almost 1%, 0.9% gain for the week for crude oil. Let's take a look at shares of Facebook. Remember the last time this company had a share lockup expiration, the last time it had a share lockup expiration, the stock soared on the news, which caught a lot of people off guard. Today it's under a little bit of pressure, down $1.15, 4.1% decline for Facebook. Last trading at $27.09. I wouldn't be surprised to see this one start to move sideways, consolidate gains for a little while. Let's take a look at some support levels for Facebook here. And this is a chart that's got the 10-day, 20-day, and 50-day moving average. We see that first level of support, you can see a break below the 10-day moving average today for Facebook. That brings a move down to 26.35 into play. So that would be the next support level for Facebook, 26.35. Again, shares are trading around 27.08 right now. Its 50-day moving average is all the way down just under 23. So it's probably going to take a pretty serious market pullback for Facebook to go from $27 a share all the way down to 23. But you never know. There are some signs of distribution in the major averages. This has been a rally that I would describe as fragile at best. It doesn't really make sense to have a bunch of long positions on here. There are, short setups out there that should be, paid attention to for profit opportunities. Some long setups that could work, but I still look at this as a trader's market where if you get quick gains in the stock, much better to take money off the table because profits can dissipate quickly in a market environment like this. It's just bottom line, it's not a market that is under meaningful accumulation, not with all the uncertainty out there. Still a lot of money on the sidelines, which is making it a pretty tricky environment right now. All right, take a look at Best Buy. Remember yesterday the stock had a big day. There was rumors that founder Richard Schultz was going to make a bid that would value Best Buy between $5 and $6 billion. Stock was up 16% yesterday on the news. Well, today it's down 14.5%. So that didn't take investors long to reassess the possibility of a deal here. Up 16% Thursday, down 14.5% today. On news, the electronics retailer agreed to extend the deadline to February 28th next year for Schultz to make a bid for the company. This is a complicated deal. I think Schultz wants, control here. I think there are private equity firms that don't want to give him full control, so I think he's still got a ways to go to get a deal here, and I think investors are expressing their disappointment today that the fact that the stock is down this much today means that a deal is probably still a ways off. Take a look at some other movers today. Centene, this is a provider of managed care services. Big gap down for Centene today. It's been a pretty nice price performer in the market, down 9.2% today to $40.85. The company cut its 2012 earnings forecast due to higher costs. And Schlumberger, SLB, also having a tough day today. At least it was when I checked on it. Yep, gap down for Schlumberger today, down almost 5% to $68.97. Big oil field services provider here. Company cut its fourth quarter earnings forecast on contract delays. It also cited slower activity in Europe and Africa. Very interesting to see what fourth quarter earnings season is going to look like. It's actually a pretty busy week of earnings next week. We'll touch on some earnings reports due next week, but majority of earnings reports are going to be rolling in, second, third week of January. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Once again, selling pretty concentrated in Techland today as Apple continues to get taken to the woodshed. NASDAQ Composite underperforming today, or leading the market lower here, down 26 points, 0.9% to 2966. Selling less intense in the Dow and S&P 500. The S&P is down 6 points, 0.4% decline to 1413, and the Dow down 39 points, 0.3% to 13,131. Market got some good news out of China today. You know, this is looking like a soft landing after all for the big Chinese economy. Business conditions for Chinese manufacturers improved in December, according to the preliminary reading from HSBC's Purchasing Managers Index. It hit a 14-month high, actually, coming in at 50.9. The final print for November was 50.5. In October, it was 49.5. So getting better readings from the HSBC Purchasing Managers Index. Shanghai Composite had a big day, up 4.3%, and we can take a look at the Shanghai Composite Index here. And this chart is not showing that gain today. This is as of Thursday's close, but a big move for the Shanghai Composite today, up 4.3%. So you've got kind of a breakout from deep inside a base for the Shanghai Composite. Interestingly enough, the Hang Seng has been the index in Hong Kong showing relative price strength. It has been moving higher. It's been sitting near highs. It didn't go up nearly as much as the Shanghai Composite today. The Hang Seng added 0.7%. Chinese ETF here, the FXI. This is the iShares FTSE China 25 index. Nice little breakout for this ETF, over 38.15 recently. So optimism seems to be building that China is going to be just fine here and not going to be a hard landing for the economy. Still not seeing much in the way of China-based companies that trade on the U.S. exchanges. We could take a look at Qihu 360. The stock is actually hanging in there. Had a nice technical breakout a couple weeks back, and then wham, got nailed lower 2 days in a row of fairly substantial distribution in the stock, but it's been kind of holding gains here above its 50-day moving average. Last trading around $24.99, just a little bit above the buy point. So even though this is technically still within buying range, I was talking to a caller a few days ago about Qihu. Its price action post breakout, the very 2 days after the breakout, was very abnormal. I mean, this is a failed breakout, so what you want to do is just kind of see if this thing can hold above its 50-day moving average. So far, so good. But more importantly, let's wait for meaningful signs of accumulation in the major averages. And if you start to see signs that new money is truly coming in from the sidelines, whether it's because of a resolution to the fiscal cliff talks, or whatever the headline is, whatever the positive headline is that the market chooses to react to, this market overall needs more signs of accumulation, and then stocks like Qihu can really get going here. But still a risky environment in general for new buys. That said, going into today, my Ultimate Growth Stocks model portfolio only had 2 long positions on and 1 short position, and today I did nibble at 1 more growth name, so I still have very light exposure to the market here. Only now 3 long positions and 1 short position, and I just don't feel the need to be aggressively committing capital in a market like this. It's just it's kind of like I said, it's a rally that has a very shaky foundation due to a lack of accumulation behind the recent move. Now the market can continue to melt up and work its way higher, and if that happens, that's fine. And if I start to get meaningful gains in some of these holdings, I won't be afraid to take quick profits if I get them. So I don't like to overtrade the market, but sometimes market conditions call for it. And since the market is not in an accumulation phase yet, there's nothing wrong with taking money off the table when profits come your way. All right. Also, today we had the November Consumer Price Index come out. Overall prices were down 0.3%. That was a little better than expected. The economists were looking for a 0.2% decline. The core rate was up 0.1%, in line with expectations. The data was very similar to what we saw from wholesale prices yesterday. Better than expected drop in wholesale inflation. Core rate came in line as well with the PPI. When we come back, we'll take a look at Adobe Systems, a big winner today, and then also Verifone Systems, not such a big winner. We'll talk about those 2 earnings reports when we get back. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Ken Shreve with you, 877-927-6648. Hope you all have big weekend plans and make it a great one. Taking a look at the NASDAQ Composite here, down close to 23 points to 2969. You know, it occurs to me the NASDAQ has two gaps here, one on November 23rd and one on November 19th that have not yet been filled. So looking at the NASDAQ's price action of late, it seems certainly within reach that the NASDAQ could try to fill this gap between, what was it, 29.28 and about 29.85. So that's this area you're looking at in here. It may not get down and fill this other gap here, but for now, the Nasdaq's recent price weakness certainly brings that possibility into play. It is a market where the risk is starting to outweigh the reward, but it's such a back and forth volatile market. It's just tricky to navigate. So it just doesn't make sense, like I said in the prior segment, doesn't make sense trying to beat the market here by going long, trying to beat the market by going short. Any stock you buy, there's of course in a market environment like this, there's a risk of having to cut losses short, protect capital. And it's just too bad, because really the Nasdaq Composite is being driven right now by Apple. When Apple is higher, the Nasdaq Composite is higher. When it's lower, the Nasdaq Composite is lower, generally speaking. So we'll see how much longer that the selling keeps up in Apple. But at last check, the stock was still trading near its session low, now down a little more than 21 points, 4% decline for Apple today to 508.32, trying to hold on to that 500 level. Apple's recent low that is in play here is the intraday low set, well, basically when the market hit a low on November 16th. Remember, that was the day when indices reversed, finished near session highs. Apple did the exact same thing on that day. And so its low on that day was 505.75. Apple's intraday low today, look at that, 505.90. So it stopped 25 cents above that intraday low from November 16th. So we'll see. We'll see if that 505.75 ends up being a support level. All right, checking in on shares of Adobe. On the surface, the quarter didn't look that great. They, earnings were down 9% from a year ago to 61 cents a share, but that was nicely above the consensus estimate. I think the estimate was at 57. I think it was a 4-cent beat. Sales, not eye-popping. They were flat from a year ago at $1.15 billion. But the company said it continues to make better than expected progress moving customers to some of its internet cloud-based offerings. So this could be a new significant revenue stream for Adobe, and the stock is reacting accordingly, up 5.9% today to 37.63. So nice day for Adobe Systems. And when it comes to Verifone Systems, the market didn't like news at all back in August. Remember, Starbucks chose a competitor's payment system, Square, S-Q-U-A-R. They are not public yet, but like we could see an IPO from them in 2013. But Verifone Systems is just getting taken over by the competition. They were, arguably first to market, or one of the first to market, and it was a strong performing stock for quite some time, but it has been under unequivocal distribution since August earlier this year, and another wave of institutional selling in the stock today, down at 10.5% to 29.75. The growth was there. Earnings were up 43% to 76 cents a share, but that was in line. Revenue came in below expectations. I think it was up 16 to 18% from a year ago. Let me double check that. It was up 18% to $485.4 million. That was about 9 to 10 million below the consensus estimate, and it was a big deceleration. So you had 18% growth in the fourth quarter. That's down from 54% top-line growth in the third quarter, 61% growth in the second quarter, and 48% growth in the first quarter. So anytime you're a high multiple growth name and sales growth is decelerating sharply, that's typically not going to be good for the stock. So it's just competition, a very brutal competitive landscape for Verifone Systems right now. The company also said it's going to pull out of a business that it once did very well in, basically signing up small merchants to accept credit card payments. There's not a store that you go into these days you don't see a Verifone terminal. It's almost ubiquitous, but they're out there, and growth opportunities seem to be diminishing, at least for now, with Verifone systems. All right, let's take a look at some other movers today. We talk about Equinix a lot. There's another provider of data center services in Europe that is building a nice base here. Interxion, INXN. It's a small cap company, market cap of $1.5 billion. They basically do the same thing that Equinix does. They're just a smaller company, and they do business in Europe. But this is a good example of a base taking shape here. There is a little swing point here of $23 a share in Interxion right now, up close to 3% on the day to $22.70. So it is flirting with a little breakout here over a swing point just underneath 23, and some good volume in the stock today too. So it's a company with pretty decent fundamentals. And again, Equinix is in the same industry group, and Interxion's got bright growth prospects, just like Equinix does. Full year profit this year for Interxion is supposed to rise 27% from 2011, and they're supposed to grow annual earnings by another 27% in 2013. So this is an interesting name in the data center service provider space, INXN. Another name I don't talk about very often, but let's take a look at Lamar Advertising. It is in a nice little base here, firming up at its 50-day moving average here, holding gains tightly. It's an advertising company, as its name would indicate, billboards and such. Let's take a look at a weekly chart for Lamar, and you'll see just a big strong move for the stock basically since late spring, early summer. Hit a low of 24, ran up to close to $42 a share, but it is holding gains nicely, actually paying a visit to its 10-week moving average, forming a new base here. So Lamar's relative price strength is worth noting. Could see more gains ahead. Mentioned LinkedIn as a stock that has a potential to be an outperformer in 2013. I like the fact that it is working on the right side of a base here, but I'm not seeing any meaningful signs of accumulation in the stock, and that is problematic. Remember, as a stock builds the right side of its base and starts to approach a former high, in LinkedIn's case, that's going to be around $125 a share. LinkedIn has been working its way higher, but not really seeing any signs of accumulation in this name. So its technical picture will improve if we see signs of institutional buying. Not seeing it yet, but can't rule this one out yet for being a potential leader in 2013. Just needs to complete its base, and we need to see signs that growth fund managers are once again interested in owning this name. LinkedIn, another company with very solid growth prospects. This is an IPO that's not a story. I mean, this is a company that has very real earnings growth. It's been profitable since 2009. It's supposed to make 72 cents a share this year. That would be up huge from 35 cents in 2011. And then out into next year, 2013 profit expected to come in at $1.28, which would be a 78% increase. So nice growth going on at LinkedIn, which of course operates an online professional network. Low volume declines today for Stratasys. These 3D printer companies, they tend to trade all over the place, but Stratasys, we'll see if it can firm up at its 50-day moving average again. It's down 3.2% today to 68.21. Does it find support or not? Or if it doesn't find support, then it breaks through that 50-day moving average, probably going to start to form a new base. I would avoid the stock for now. And we also have MasterCard under a little pressure today, but light volume in Stratasys, light volume in MasterCard as well, trading in the middle half of its trading range today, down $1.98, 0.4% to 482.45. So that's pretty much what's going on. We've got some other movers out here. John Deere. It wasn't that long ago this company reported earnings. The market did not like it back in November, but look at how this stock has rallied all the way back. It's actually a pretty nice base taking shape here with a swing point of 87.50. Deere is at 86.13 right now, so it's a $1.25, almost $1.50 underneath that swing point. Can't rule out a technical breakout for Deere here, but a breakout will depend on, again, if we start to see money come in from the sidelines, and so far that is not happening. I recently took profits in India-based bank for the Ultimate Growth Stocks model portfolio. There's another bank in India that is really showing relative price strength out here. Ticker IBN, ICICI Bank, ICICI, ticker IBN on the New York Stock Exchange. This is a bank that had a nice gap up in late November, kept working its way higher, trading very tightly, holding on to gains. Really like the technical action recently in IBN. This isn't IBM International Business Machines, it's IBN like Nancy. Also, Valiant Pharmaceuticals, another good base taking shape here. Could actually be forming a handle area now. Valiant is a drug maker involved in the areas of neurology, dermatology, branded generics. Excellent fundamentals here. Really not much in the way of institutional selling in this stock, which a lot of stocks have been seeing institutional selling, but not Valiant. So this is a liquid stock, average daily volume of about 1.3 million shares. Big company, too. Market cap close to $18 billion. This is a good base taking shape. So if you get a good handle area that forms here in low volume, this is another chart that could yield a breakout over 60. So good one for the watch list. Names that are looking a little vulnerable here. Let's take a look at Chico's. This is a specialty women's retailer. You can see a series of lower highs here. Stock is starting to live underneath its 50-day moving average. The longer it stays underneath this support level, we could see this one make a trip down to its 200-day moving average at 16.35. So Chico's right now down 21 cents, 1.2% decline to 17.97. So another $1.50, and it'll be down to that 200-day moving average. Chico's is a stock that is starting to look tired. And another stock starting to look tired here is Nation Star Mortgage Holdings. You can see a lot of sellers in the stock back in late October, early November. Falls apart, breaks below its 50-day moving average, tries to rally back. I mean, if this isn't a good example of what a ceiling looks like, the 50-day moving average turning into a ceiling, this is actually a very good example. This is a stock that, we'll take a look at a weekly chart for NSM because it has made a fairly big move in recent months, and this is a stock again. Looks like it could be topping here. Looks like it could ultimately pay a trip down to that 24 level, 24.5, something like that. So Nation Star Mortgage Holdings, a former leader that is definitely looking vulnerable here. Folks, I mentioned Ultimate Growth Stocks at the top of the show, which I normally do. If you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Sign up over the weekend. You'll get my next weekly update, which comes out Tuesday morning. I send out email buy alerts, sell alerts, market updates in between weekly updates to keep you abreast of what we're watching, what our take is on the market. But every Tuesday you do get an extensive update, and I use a combination of fundamental and technical analysis when evaluating and selecting stocks for the model portfolio. It is a long-short portfolio, so if we're in a market uptrend, I tend to be long, and when I'm seeing signs of institutional selling, signs of a downtrend, market tide flowing negative, I'm not afraid to put on a couple of short positions. So be sure to check out 30 days free of Ultimate Growth Stocks. And also don't forget the Tiger Dollar promotion on the homepage of TFNN.com. Purchase Tiger Dollars and we'll donate up to 10% of your purchase price to the Salvation Army. Sign up by December 19th and get a 25% bonus match on any amount over $500. Tiger Dollars you can use to save a lot of money buying newsletter subscriptions at TFNN. Headed into the final break. Folks, we'll check on the markets one last time. Happy Friday. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Let's check in on the major averages one more time before we start the weekend here. NASDAQ Composite down 24.5 points. Trading near its session low, down 0.8% to 29.67. Mentioned the possibility of the NASDAQ Composite eventually filling a gap here from November 23rd. There's also a gap here on November 19th. So now that the composite is below support, it could bring a gap fill from that November 23rd gap into play. We'll see how that plays out. The S&P 500, meanwhile, also near its session low. It is now below its 50-day moving average. Was above the 50-day line for 4 days, but that was short-lived. NASDAQ Composite down almost 7 points, 0.5% decline to 14.13. The 50-day moving average is 14.15 for the S&P. And finally, the Dow Jones Industrial Average. We'll see that it is right at its session low, still trading at its 50-day moving average here. The 50-day line for the Dow is 13,119. The Dow is at 13,123, so 4 points above its 50-day moving average. Volume on a Friday, not real heavy. Yesterday, like I mentioned, volume on the NASDAQ was 1.77 billion shares. We did get the NASDAQ's third distribution day yesterday. So 3 higher volume declines now for the NASDAQ in recent weeks. That points to mild distribution in the market. Still just overall a tough environment for longs to make headways, and tough environment for shorts to make headways as well, because right when you think a short position is working, the market turns around, goes higher on a positive headline out of Washington. Overall, a pretty tricky market environment out there. So I think it's best to just kind of mostly keep the powder dry here. Don't be in a rush to put money to work. At some point, I think market conditions are going to improve, and if they don't, well, we don't have a lot of exposure right now to the market anyway, so we're protected either way. So, but anyway, volume today does look to be will probably come in lower than what we saw Thursday. So I don't think there's a risk for another higher volume decline for the market today. So that's the silver lining in an otherwise disappointing session. Coming up next week, kind of a back-end loaded week of economic data. Well, on Wednesday we've got housing start and building permit data. Let's check in on the ITB, see how home builders as a group are doing. This is an ETF that tracks all the major home builders here. ITB down 8 cents to 2024. Still not clear to me that this is ready to find support at its 50-day moving average. To me, the home builders look like they're ready to consolidate. I've been kind of singing that tune for a while now. They've made big gains since July. Would like to see them form a good base here. If it happens and new money starts to come into the home builders, they could continue to lead in 2013. But the ITB right here, you can see all the distribution in the fund back in late October, early November. Some institutional buying here, but notice how the fund really didn't make any headway on these above average volume price gains here. So still kind of flailing around its 50-day moving average. Also, next week we've got the third estimate, final estimate to third quarter gross domestic product. The second estimate was growth of 2.7%. We've got existing home sales on Thursday, the Philly Fed on Thursday as well. Earnings next week, a lot of high-profile names. Micron Technology, Red Hat, Nike, Research in Motion, all of these companies report on Thursday. Coming up next, the Tom O'Brien Show on TFNN from 4 to 6 Eastern. Have a great weekend, everyone. I will be back as usual Monday, 3 o'clock Eastern, for another edition of Breakout Investing. Thanks very much for listening.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.